Hi, there is a real estate company, and this real estate company is into construction projects. So the auditor has requested the management that whatever estimates which were made in the prior period has to be considered. So the prior period estimates must be considered, and what is the actual outcome in the current period that has to be seen. See, example, you made a provision of 5 crores in this year, whether provision has been met or not. So this is what the auditor requests the management. Whereas management says that no, this is not correct. You cannot consider the prior period information. Whatever prior period provisions which has been made, that cannot be considered in the current period. Now, whether the contention of management is correct or not, that has to be understood. If you read SA 540, auditing accounting estimates, including fair value accounting estimates and related disclosure, the auditor can review the outcome of accounting estimates included in the prior period financial statement wherever applicable, and their subsequent re-estimation for the purpose of current period. So auditor can review the outcome of accounting estimates of the prior period and its re-estimation in the current period. The nature and extent of auditor's review takes into account the nature of accounting estimates and whether the information obtained from the review would be relevant to identify and assess the risk of material misstatement of accounting estimates made in the current period financial statement. So for example, say you made an estimate provision of say 5 lakhs, okay, but the actual payment was only 1 lakh. So there is definitely a question that why a higher provision was made. That's how it is actually. So the outcome of accounting estimates often it will differ from what you can say the accounting estimates which are recognized in the prior period by performing the risk assessment procedure. So you have to find out the reasons, to identify the reasons that see whatever outcome you are expecting, which comes actual outcome, and the estimates which has been made in the prior period will always differ. So you have to identify the reasons. What are the reasons why there is such differences actually? Auditor may obtain the information regarding what you can say so auditor can always look into what you can say, he can always look into the information regarding the management's prior period estimation. So what is the effectiveness of the management prior period estimation actually process, and auditor can judge the likely effectiveness of the management current process. So see what is the process you are following to make a prior period estimates, and from which auditor can judge the likely effectiveness of the management's current process. Okay, that's the thing here. And audit evidence that is pertinent to the re-estimation in the current period of the prior period accounting estimate. So suppose say the prior period estimates which has been made, and if it is re-estimated, then you require an audit evidence in this regard. The audit evidence of the matters such as estimation uncertainty that may be required to be disclosed in the financial statement. So here there should be a disclosure of the estimation uncertainty that has to be completely disclosed. So as an auditor, what happens actually here of the prior period, he may assist the auditor. So it will help the auditor to identify the circumstances where there is a increase in susceptibility of accounting estimates, or there may be a possible management bias. So there may be a very high bias of the management. The auditor's professional skepticism assists that in such circumstances are conditioned to determine the nature, extent, timing of the further audit procedures. That's the thing here. So here please understand that the review is not included to call into question the judgment made in the prior period based on the information available at that point of time. So in such case, what happens, the auditor can review the prior period estimates, and he can review the re-estimation which has been done in the current period. So this way it will reflect the susceptibility of accounting estimates, or it will indicate that there is a possible management bias where the provisions were not booked properly or estimates were not made properly. Okay, so here the contention of management is absolutely wrong.